All right. Hey, good morning, everybody. It is a little bit late. I had to reboot the router and then I had to reboot my computer and then all that kind of stuff. But anyways, I think it's 6:38 on Wall Street in the AM. Welcome to QuantBox Live, where we get our global macro on to uncover the best fundamental investment opportunities across global markets. Yeah, stocks, bonds, commodities, currencies, it's all there. My name is Wayne McDonald. I'm the founder of QuantBox, but I'm also a classically trained Harvard economist. I love looking at macroeconomic trends, in particular as a trend trader. I'm a macroeconomic trend trader. But anyways, hey, QuantBox automates all your macroeconomic research, does it automatically for you, pulling information from government websites, from private websites, from servers, from databases. We don't scrape and steal stuff off the internet. We are plugged directly into places like the Federal Reserve Bank of the United States, so on and so forth. So, anyways, look at all the pretty colors. You know you want it. It's amazing. Why don't you try it out? It's a trial. $8 gets you a week. You know you want it. QuantBox.co. But if you watch it on YouTube, you're watching. It's probably 10 o'clock in the morning for you. It's 6:30 here, and we're already got our macro on. So why don't you join, right? Take the training courses, use the analysis, join these live events, ask questions, get involved. QuantBox.co. That being said, everybody here is already a subscriber. So let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, looks like I actually need to log in. Let's log in. Look how clean this is. It's so clean. Yeah, what a nice site. Oh, yeah. And I guess I need to highlight this. Less than a week from now, we are doing the Q3 Global Market Outlook, where I present research. It takes me about 10 hours to do all this stuff and put it together. So we're meeting Tuesday, July 18th, 10:30 a.m. to try to set up the next 3 months. Not me giving my opinion, but me going through stuff on QuantBox, but also stuff not on QuantBox, what we call high frequency type data. And we, try to assess not just economic research and fundamental research and technical research, but we're also trying to look at market psychology, sentiment, greed, fear, behavioral economics, all of that we're trying to put into this outlook. So sign up for that. Let me just pop a link for those that haven't signed up yet. It's very short notice. I know I just did this at the last second, but it was requested. So why not? Let's do it. Let's get her done. All right. So let me log into Pro. Did an email go out this morning? Did you get one about a half an hour ago? Oh, it did go out. See? Cool. Cool. So that means there's a new feature, which means I don't think I actually unlocked it. Hang on. Sorry, I got lost in my meditation today. I meditated for like 40 minutes. All right. So hang on. What do I need to do? Oh, yeah. Data. Hang on. I know I'm doing this right in the middle of this, but I need to unlock that feature I just told everybody about. And we'll look at it. By the way, the big thing today is CPI in the United States of America, so be ready for that psychologically. Okay, hang on. I'm logged into the back office of QuantBox. I got to go to there, and then I got to go to there. And where is it? So I've released the new dashboard. I've released the new gauges, updated the scatter plot, updated what is now called the swing trade heat map. What did I release last night? I don't even remember anymore. Did I release the new money tracker? Yeah, where'd you guys go? I've forgotten. What did I release?
The central bank prediction.
Oh, good. Nice. Good. Let me find where that is. It's hidden under all the new upgrades that I'm launching. Not there, not there, not there, not there, not there. Center. There it is. No, no, that's not. This is it. Okay. And I need to show. So I've unlocked it and I hit view. So watch this. So it's not there. Okay. So I believe I'm going to reload the database. We'll just take a look at that quickly. So one of the major things in all this update, if you want to call it QuantBox 2.0, you can. QuantBox up until now has looked only at economic conditions. So it'll gather GDP, inflation, and all that kind of stuff. And then is that good for the economy? Is that bad for the economy? And then do some comparative analysis. How is the UK doing versus the United States? How's the UK doing versus Europe? Economics, right? The only thing that it looked at that was market based was the technical analysis, which is huge compared to similar services out there because they would just only look at economic data. QuantBox had a sort of a competitive advantage because I'm a trader, it also integrated technical analysis into that comparative analysis. So all these releases you'll see are now more market-based research because there's the economy and then there's the market, what people are actually trading. And the traders are usually 6 to 12 months in advance. So you kind of need both. And that's what like we're releasing more and more like that risk gauge. So before I show you the new stuff, let's go back to this. And notice how the risk gauges have changed since yesterday. These have both gone neutral, neutral, right? Look, slightly bullish, slightly bullish. Okay, slightly bullish, but no clear direction. But on a monthly basis, it has ticked a little bit up. Cool. Now these colors are wrong. That should be green. Interesting. All right. So let me actually snip that. Let me snip that. Oh, that makes me so happy. That means I get to yell at somebody this morning. What's your major malfunction? Look at that red. Okay. Yeah. That's supposed to be green. Good. That gives me permission to yell at somebody. It always makes me feel better. Okay, cool. So, anyways, that has changed. This is all changed, but this is all market based. What's the S&P 500 doing? What's the yen doing? What's gold doing? What's the yield on the 10-year T-note doing? What's the dollar index doing? What's the VIX doing? Put it into a basket and look at it on 3 different time frames. This is now tilting a little bit risk on. Cool. So that's market. That's what the market is doing. It's not looking at economic data, it's looking at how the market is behaving. Plus, QuantBox has all this economic data, right? Now, check this out. This is what's new. Okay. This is what's new. What's it doing? It's looking at inflation forecasts or reporting to you inflation forecasts looking out a year. So you can click on New Zealand, for example. Oh, current and projected inflation forecasts and interest rate forecasts from the central bank. Isn't that cool? Okay. And then you're like, wow, cool, right? So then you can take a look at here and see this is the interest rates right now in New Zealand, and they're expected to go a little higher and then pause, then cut, then cut, then cut, then cut, then cut. That's nice, isn't it? That's looking into next year. However, wait for it. How does that compare to everybody else? Oh, it's a dramatic cut next year relative to everybody else. Huh? Switzerland is not going to cut next year. Okay. Euro is not going to cut next year. Yen is ain't, they're not going to raise and they're not going to cut. They're going to do nothing for the next year. Dollar, maybe a slight cut. Aussie, a little bit bigger of a cut. Pound, really? Well, that's what they're projecting. It's not an opinion. That's what they're telling us in their database, in the reports. So, for example, we're looking at dot plots in the United States to get that information. And so Kiwi's going to raise a little bit more and then cut more and more, the absolute cut, a bigger number, but also the rate of cut faster. Good to know, right? Isn't that beautiful? Come on. Come on. That's beautiful. Look at that. Yeah. I mean, I love it. I love it. I love it. Although that's the wrong color, red. I'm gonna have to yell at somebody. You call that red? That's pink, isn't it? Right? Yeah, that's pink. It's supposed to be brick red. So somebody gets yelled at. So let me put to do. Publicly shame and humiliate developers. Okay, cool. Nice. So, it's going to be a great day. I can feel it. So anyways, that's on QuantBox Pro. Yo. Okay. Did prices triple? No. So this is where your subscription fees go. Cool, right? Nice. Anywho, so let's get back to it. And we're looking at the market, and it went from mixed yesterday to slight on risk. No, 2 days ago it was mixed, then slightly risk on, and then it went back to risk. And then I think yesterday it was mixed, slightly risk on, but mixed. So this is actually how it's trading. So maybe it's because at 8:30 we have CPI in the United States. Now, I listened this morning to Bloomberg. They were talking about how that the headline number is expected to come down, but the Fed is watching core CPI, and therefore it's all about the core and stuff. Well, I kind of agree that, in fact, Jay Powell actually calls it super core. So it's not just core CPI, it's super core. But where's the mistake? Sorry, excuse me. Where's the mistake? What are Bloomberg analysts? What error is our Bloomberg analysts making? Huh? It's not like it's not. Are they wrong on core? Are they wrong on super core? Well, they didn't mention super core, so they're kind of wrong there. But what's the bigger mistake when they say the Fed is watching core CPI? Common mistake. Anybody? Nobody knows? The Fed watches PCE. They don't watch CPI. Like, oh boy, right? It's a big mistake. But look, the market's still going to move. But I'm a stickler for facts, and so even the person they were interviewing was like the chief economist of a major bank. And they're like, well, the Fed is watching core CPI. And I'm like, no, they're not. They actually tell you they don't look at it. They look at PCE, personal consumption, then the core of that. So anyways, so they're I would say at least partially wrong on that. But I would say philosophically, it is correct. They're watching core inflation. So the thing to watch today, and the thing that's going to move all of these biases, is the headline should come down. I would expect it to be down, and that'll pop the market. That would be good. And then I think what we're going to find is core is not that great. It does come down, but not nearly as much. And then the super core probably is flat or even goes up. Does anyone remember super core? Inflation minus commodities, inflation minus food, inflation minus energy, and inflation minus housing cost. Okay, in your personal finance, in your personal budget for your household, have you ever said, well, we're going to base this budget, but we're not going to include food, air conditioning or heat, gasoline for our vehicles, and we're not going to count our mortgage or our rent? But we're going to be a stickler on our budget after all of that. What's after that? Netflix subscriptions? Like, what do you got after that, right? So, anyways, but the thing is, when I don't think rents are going to come down. They're going to come down eventually, and that's where we're really going to have more of a dramatic change in in inflation. But it has nothing to do with the Fed really or interest rates. It just has more to do with uh, the actual math of how we calculate these things. Let's just put it that way. So it's not a policy, uh, but nonetheless, core is going to stay high. Nobody's going to sell their house. Again, the example I've given before is that if you used to be able to qualify for $1 million mortgage, but then interest rates have doubled, now you qualify for a $500,000 mortgage. And you're like, but 2 years ago, I looked at $1 million house. I don't want to buy a $500,000 house because I'm still mentally at $1 million house. Yeah, then you're going to wait. On the flip side, why would you sell your $1 million house to then get a new mortgage for 500,000 and get a smaller house but pay the same price monthly, right? Can you imagine cutting your the size of your house in half but paying the same expense? You're like, dude, I'll just keep my luxury house, huh? So anyways, that market's not going to move, and therefore rents and owner equivalent rents are going to stay high. So anyways, sticky is what we call it. So currently nothing going on, nothing going on. Like Europe didn't do much. Okay, Europe did not do much. uh, I kind of reorganized this a little bit, and I think I'm going to continue playing around with this. So I'm going to start breaking stuff down where there's market analysis and fundamental analysis. Did I release the new COT report? I think I did, didn't I? Or is it accidentally there? Did you guys look at it yet? Oh, that's so much better, huh? So that now this is part of your fundamental analysis. This isn't the market kind of like how's the market trading today. This is the market. I mean, I guess I could put it under market analysis, but this is institutional positions. It's not really what's happening today. It's week over week changes. But do you like how I organized it a little bit better? Yeah, a little cleaner. This information is much easier to read, huh? Much easier. Okay. Because we're looking at the change and all that. Okay, cool. Okay. Look at that, man. 1.2 million contracts short the S&P, the 10-year T-note. But then if you scroll, and you might have missed this, okay? When you're looking at euro dollar, and of course you can change these assets, here's the long and short, okay? So primary is euro, okay? So euro investing is slightly down to flat. Okay. Secondary is the dollar, and boom, there's a big spike in dollars. So this creates a negative bias for the euro dollar just on positioning. So you can look at this and say more people are long dollar than euro. Okay. So it's just a quick visualization. Yet the red line is what the euro dollar is actually doing. Well, it's helpful, right? Because you're going to look at this and say, wait, there's more traders long dollar than long euro. Did that pull the euro dollar down? That's what you're thinking, right? Is euro dollar down? Well, now you got to like, where's my chart? You got to open your chart package and go take a look. I'm just trying to save you time. There it is. So, no, it hasn't brought it down yet. So you might say, ooh, if it hits resistance, There's going to probably be some profit taking, and maybe tomorrow or next week it's going to be rolling down that way because that's how institutions are positioned. And Andrew says he likes it because it also shows the past. Yes. And this is as much aggregate data we have. As we roll forward, we're going to fill the database with more and more weeks. So right now we only have what, 6 months all the way back to March. So it'll populate over time. Cool. Nice, huh? Remember, we're pulling this data live out of the Commodities Futures Trading Commission database. And isn't that nice? We're pulling it directly out of the government. I mean, seriously, I hope you're really, really happy because I got more and more and more to keep showing you. So I hope you're impressed. I hope you use this. I hope it's helpful, honestly. Like I hope you use it. I hope it helps. But it's pretty cool, I think. All right. So let's go back to the market analysis and look at the scatter plot. All right. Cool. All right. All right. All right. And as when you go into a market neutral, you'll see that there's a lot of things down, there's a lot of things up, there's a lot of things flat, and they all kind of wash each other out. Huh? So what do we want to look at this? So let's do, I guess I can just do this. I'm doing it backwards. There we go. So not a big change, but it's expected to go up. I'm still in a Bitcoin, like not on a trade. I have a Bitcoin sitting there from 2 days ago, and I don't think it's gone up or down. I would like it to go up, and I'm freaking out that it'll go down. And so I wake up in the morning and I'm like, oh snap! Like I'm right on the flat line. So an update would be great today. So CPI comes out lower than expected, and that tells the market the Fed doesn't need to raise two more times, and that the Fed dot plot in September flattens back down to one hike. This is the behavioral finance that we're talking about. So it pops up today because that's also part of a risk on basket. So if today is a risk on basket, that would be a bullish asset in a bullish market, and that would be expected. So I'm going to try to hang on to this trade and let it pop. Okay. I made some silly purchases recently, so I need that to go up to pay for them. I'm like, please go up or my wife's going to kill me. Anywho, so what else? We can just look at the majors. Okay. Dollar weak, but Kiwi weaker. Like right now, you can see Kiwi is very weak. It's weaker than the dollar, and it seems like the dollar is weak. See, right? USD Swiss franc down, that's dollar weakness. USD CAD down, that's dollar weakness. But dollar stronger than Kiwi? Wow. Pound neutral versus dollar. I think Denise had a pound Kiwi trade yesterday. So Kiwi looks weak. Nothing going on the pound, and that's kind of the thing where, I mean, but weakness here would push that up. But I'd rather have, something that like Euro, Kiwi would be performing better. And the thing is, when you look at QuantBox score, it's giving Euro a 2 over the dollar. So it's slightly bullish versus neutral. So Euro Kiwi might fundamentally be better, but I don't know anything about the technicals. Okay. Take a look at only the stock markets around the world. Okay. This was by far the biggest winner for a very long time. And I looked at seasonality. Thank you, QuantBox. Looked at the 20-year average of what happens to the Japanese stock market. July 1st actually went from an extreme bull to a cautious bear, and it's been down since Canada Day. Cool. Okay. 10-year T note now flat, but I think it's solidly above 4.0 today. Well, I'll go back and take a look at that. NASDAQ's up today. S&P 500 is up today. Dow is up today. Even the FTSE and the German DAX. Now, we know technically, we've been watching this for a long time, so we understand why suddenly they're bullish and unexpected. Unexpected economically. When you look at the economics, that doesn't make a lot of sense. Okay? But we knew it technically. So we know it, and remember, technical analysis is really statistical analysis of market conditions. So economically, it doesn't make a lot of sense. When we look at the charts, it totally makes sense. We've been actually expecting that for days, almost a week. We've been waiting for that. Now it's happened. Really? Okay, so it's unexpected. Maybe I need to change the language there. Bullish out of position, maybe, but out of position takes up a lot of space. But anyways, there looks like when you see up, 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 that's risk on. So that makes me feel good about my crypto. Okay. So now look at, okay, Bitcoin already up 0.93% for the day. And everything else up about the same. So this could go up another percent today and I make money. I'm trying to give myself confidence based on rationality. I'm in a position, cash position, and I'm asking myself, do I stay in or do I get out? You see, I look at the scatter plot, which is measuring right now, and it's like, yeah, you're cool, bro. Don't worry about it. Oh, nice. Okay. That's how you use it, right? You guys starting to use the scatter plot more? Yeah? Yeah, thumbs up. If you looked back 1 year ago, were you thinking, you know what I need? I need a scatter plot. Anybody doing that? Walking down the street, excuse me, do you have a scatter plot? No. Oh, excuse me, madam, where can I find a scatter plot? Oh, no, there isn't one. Now you got one. Yeah. You want to see my scatter plot tattoo? Yeah. See, I can flex it and do it in real time. Bloop, bloop, bloop. You put it on your chest, right? Woo, 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 flexing at the beach. Look at that. I can make the S&P 500 go up and down. Yeah. And not, I don't like it that much, but it's within reason though. Yeah. So anyway, risk on is one way to look at it, but do we have it yet? Not quite yet. That bugs me. I think I know how to fix that without even yelling at somebody. But I don't want to do it now. All right. So cool. Again, here's the new I renamed it because I just, you have to have a proper name so we understand why you're using it. So I renamed it the swing trade heat map because these are all weekly data. So oil is still the biggest winner here, up 6% over 7 days, bro. Yeah, but still hasn't broken out. Okay. Look at the biggest loser. Okay. Japanese stock market, USD yen, CAD yen, Aussie yen, Kiwi yen, Euro yen. And guess what? Yeah, we were ready for it. A week ago, when all of this was green, the biggest winners were all the yens. Holy smokes. To see that coming and be prepared, it's priceless. Even if you're not short, if you'd just taken profit right around Canada Day and went on vacation, like again, I have to reinforce this. It's not me, by the way. It's just now we have the research, we have the data, so you can be prepared. But many of you have seen me literally be on vacation Canada Day and cleared out all my trades in advance because I think there's a high probability of something like this occurring. Look at Kiwi Swissy down, Aussie Swissy down, USD Swissy down, CAD Swissy down. Do you think it also does something with Swissy? What's happened? Do people really care about the yen? Do people really care about the Swiss franc? No, they're just taking profit. That's all it is. Those were funding currencies, and now they're unfunding the Kiwi Swissy long, the Kiwi yen long. They're unfunding the Aussie yen long and the Aussie Swissy long. They're just getting out, paying back their leveraged loans and going to cash. That's it. They just took profit and went on vacation. So I hope you appreciate the humanity behind what I'm talking about. You might not be able to predict the market, but you can predict that people are going to go on vacation, right? That's the next level of intelligence. Because you will hear experts that manage $1 billion and they're like, you can't predict the market. This is a random walk down Wall Street. The only thing you can do to protect yourself is diversify. Really? Oh, God. Why would you invest money with somebody like that that just openly admits this is a total crapshoot and I have no idea what's coming? Really? Oh, gee whiz. So, anyways, now you're like you can't even predict people are going to go on summer holidays. Like, can you predict Christmas every year? No, it changes every year. Uh, okay. So, yes, it's important to know seasonality. Okay. So, anyways, so we'll go to our charts. Let's get on with the technicals. There's so many things I have to release. I don't even know what I've released. There's a couple of things I would do if I had it, but I don't. So I'll have to release it sometime soon. There's so much more. I think the yeah. So, anyways, there's so much more to release. But if you're a QuantBox Pro subscriber, boy oh boy, there's more to do. All right, so we can go and say today scatter plot feels risk on. The risk on basket has not become risk on. Okay. So that's kind of interesting, isn't it? But let's just play with this idea. We call it a hypothesis that today is a risk on day. So I would frame, like, here's the Bitcoin. I would frame this as going up. Okay. And so if it was going to go up, where would the right price to buy be? And where would the daily take profit be? What's our projection? For that, I like to say, well, if we're risk on, Bitcoin would go up. Okay. So now you go, for me, anyways, I go insert indicators, custom, biased pivots. Okay. This is available at Investor Bootcamp. Bullish mode daily so we want for today. And we want both the extreme and conservative. So you got to have that at true. So that's good. And now it shows the buy zone for today. And we've already launched off of it. And the target is between 31,000 and 31,150. So today's trade plan looks like this. Okay, up to that resistance, down into the entry zone, a little bit of a higher high, down, right? And then CPI comes out, and we find ourselves up here. using both the moving averages and the pivot points. Okay. On a 4-hour, you have permission. It makes sense. It just gets us back to resistance. So maybe I do take some profit there today. Depends on what happens on CPI. Okay. Can you draw the MACD for me? If I handed this to you? Huh? Child's play. Easy. That is so easy. It's so easy. Everybody's trying to please me, baby. Okay, let's draw a range. And there's the water line. Okay, and where'd my drawing tool go? Oh yeah, rebooted. Epic. Hopefully it works. Right. Okay. So we'll MACD is above the water line this whole way. Oh, let's do this in black so you can see it better. Up, 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 sharp, drop, up, a little drop, up, up. Then down, 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 almost to the water line. And now is doing this. So two things in your thought process. What direction is the trend? Okay, bullish. Not opinion here. I'm not looking at economic data, all that kind of stuff. This is just what the chart says. Okay. Is it bullish aggressive or bullish conservative? Currently, it's aggressive. Okay. Now, of course, it'll change if we can't breach, if we can't go higher and it pulls that back around. What it'll do is it'll pull the MACD down and you go bullish conservative. It's just, I'm just describing what is now. By the way, if you're not sure, if you don't believe me, you're like, Wayne, prove it. All right, I'll take your challenge. Let's, where does it put MACD? Here's the standard 21.55.8. Sweet. Okay. There it is. Up, 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 up. And then right in here, sort of down, 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 almost to the water line, and then coming back up. So if it collapses, because remember, these indicators are lagging. I can't tell you if it's going to go above or below. That's where your bias needs to come in. But it's not pointing down currently. Now, if it came down, yeah, it'd collapse. Yeah. And then it would not only, the first thing it would do is bullish conservative. And then the second thing, if you cross the water line, it would go bearish. Okay. So it's just simply bullish. Maybe bullish aggressive is the wrong language, just bullish. Yeah, I think that's right. I think I'll give that to the development team. You're either bullish or bullish but cautious. I think that makes sense. Aggressive's too much. It sounds like load the boat, everybody. We got a sure thing. No, we're doing technical analysis. Okay. All right, cool. Cool. So, anyways, that's that. So I've gone too long today, but I hope this was helpful. Uh Daily, we're neutral, right? The indicators are mixed. Weekly indicators are mixed again. So we're kind of waffling. What does this mean? We don't have clear trends on all things. You might find some trends on some things, but what we're concerned with when it comes to macroeconomics is aggregate demand. So if you're just finding a trend and the trend exists on its own, it's a singularity. And so you're kind of on your own. When does the ice floe break up? I don't know. So when do you get off the iceberg? You don't know, right? You're just floating on your own. With aggregate demand, you can find one logical rationale like risk on. Why is it risk on? Everybody willing to take risk on whatever asset is actually doing it. So you're looking at across the board aggression or conservatism. And that's what we look for, because now there's a reason behind that. And so that reason today might be CPI. The reason might be tomorrow or Friday. I believe we start getting the first earning reports in the United States. And how that starts could create the risk on or risk off. And that's what we're looking for across the board: aggregate demand or aggregate demand destruction, risk on, risk off. So thank you for being part of QuantBox. I hope you enjoy these QuantBox lives that I do every day. And if you're watching this on YouTube, why don't you sign up? Okay. I've already launched 3 or 4 or 5 amazing things, and I have a lot more to go. So we've gone from good to great. I hope you get involved, because I'm spending tons of money. So please sign up, because we can just reinvest all of this, right? So cool. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day, everybody. See you.